Hi, and thanks for tuning in to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm speaking with Jim Weiderhold, who's the Commodity Indices Product Manager at Bloomberg. Jim, thanks so much for joining me. Absolutely. So, Jim, I want to talk to you about the broad commodity space in a minute. But before we go there, I have to ask you about gold because this is the commodity that everyone's talking about, recently surpassed $2,500 per ounce, a record high. Can you tell us what's driving this surge in the price of gold?
Yes, so gold is hitting new highs here. And whenever it tends to do that, one of the last legs is the investment leg, which is driven by retail investing into the gold ETF market. Prior to that, during this year, we've had very extensive central bank buying. We've had some of the biggest buying in gold from central banks, about 500 tons, which is a record. So that was part of the reason why gold was moving higher. But the last leg is definitely the inflows into the gold ETFs.
Very interesting. And I was looking at the World Gold Council's demand trends report recently. They talked about the central bank gold buying. They also mentioned OTC buying of gold. Can you talk about what that is?
Yeah, the OTC buying of gold, typically people gain exposure through either the physical metal, through bars and coins, but you can also trade gold futures, which is where a lot of market participants gain exposure. So the OTC swap market is pretty big in the commodity space in general. Yes, the World Gold Council did highlight that the OTC trading was definitely one of the bigger drivers this year of demand.
Let's talk about the broader commodity space now. Obviously, the Bloomberg Commodity Index is a very popular index that tracks movements in commodities. What role does gold play when it comes to that index?
So gold plays a very interesting role within the Bloomberg Commodities Index, or BCOM. Gold is currently the highest weighted index within the highest weighted commodity within the index. It currently has about a 17.5% weighting. Gold sits within the precious metals sector of BCOM, along with silver. So gold is one of the key metals that is in the Bloomberg Commodity Index. And the overall construction of the index, it's 2/3 based on trading volumes of the underlying commodity futures, and a third based on the world production of each commodity. So the fact that it's the highest weighted commodity within it means that it has very extensive liquidity with the trading volumes and also the world production.
That's interesting. When you look at some of the other commodity indices like the S&P GSCI, you see oil has this massive weighting along with other energy commodities, and gold's a very small part of that index. In this case, it sounds like gold is the number one commodity in the index. Do you think that makes more sense, that gold is going to have a bigger weighting than oil?
Well, it's just a function of how the indices are constructed. So the BCOM has capping measures in place where at the start of each year, the index is reconstituted, and we announced the 2024 weights, which we did at the end of last year. And each individual commodity is capped at 15%. So within the BCOM, no commodity overpowers the others in terms of importance. So it's a more diversified approach to a commodities exposure.
And how does gold move in terms of the broader commodity complex? A lot of times you see, energy commodities moving up together. You often even see, copper and oil moving together sometimes, when China's economy is performing well or vice versa when it's performing poor. Does gold kind of, move on its own, or does it move with that broader complex?
So gold, again, is very interesting because it's uncorrelated to other asset classes, but within the commodities markets, it's also uncorrelated to other commodities. The one commodity that is the closest mover is silver, but gold's use cases are vastly different from other commodities in general. It has a little bit of the same consumer demand functions that other commodities have. Gold has some use in technology with semiconductors. It's using casings and things like that. But that's a very small fraction of the overall demand of gold. The main drivers are the investment as well as jewelry demand. And then over the last few years, the central bank buying has really picked up. So that is starting to move in par with the other two demand drivers I just said.
Finally, Jim, as we head into the second half of the year, what are you looking at in terms of gold and the broader commodity space? what could drive prices higher and what are the risks that could drive prices lower?
So as gold makes new highs, there are many market participants that are price sensitive. So once they make new highs, it could lead to some pullback in the short term. The one thing that I'm looking at for the rest of the year is that positioning among the main demand clients out there is pretty extended in a few cases. So if you look at the futures positioning of hedge funds, the net long positioning in gold is near 4-year highs. As I said, central bank buying has been very strong over the last few quarters, as strong as it's been in history. And then now we have, after pretty quiet first half of gold ETF buying, really ramping up in the third quarter. So just like stocks could potentially move higher as people continue to climb, continue to buy. But once that last piece is fully bought in and everyone's bought into gold, that could be something that leads to a little cooling off of prices.
Fantastic. Well, we're going to have to leave it there, Jim. It's been an absolute pleasure having you on the show. Thanks so much for your time.
Great. Thank you so much for having me.